Rising interest rates have left some of these banks, Davide, of course, with some of the low interest bonds that they cannot be sold in a hurry without losses. We're seeing a lot of the European banks slam. Deutsche Bank down more than 7%. The same for HSBC, down 5%. Is this justified?
Listen, this is just pure panic. Because what has happened in these two small California Silicon-based Valley firms, one was intimately linked to the crypto world. We know what a huge fraud FTX has been, and that's basically the Silvergate demise. In the case of Silicon Valley Bank, first of all, the name says it all. It's a Silicon Valley Bank. This bank tripled its deposit in 1 year. Now, this doesn't happen to anyone in the world. And basically, they got deposits out of VC, and then this bank was lending money. So it was part of a VC bubble in Silicon Valley. Then what happened? They had to buy treasury, so they didn't make a mistake. They bought very safe assets. But the sharp rise in interest rate forced them to realize some mark-to-market losses because eventually the same VC that deposited the money panicked. So I think it's a one-off, intimately linked to the Silicon Valley and tech bubble, and reminds everyone that you need to keep your deposit. Yep.
Diversified, right? And this is the point, is that if you're a small and mid-sized bank, then maybe your funding is less diversified than the others. But talk to me about the big banks. So I don't believe that analysts are getting it wrong or shareholders are getting it wrong and selling off some of these big holdings just because they don't understand the story. Is there a longer-term concern that the revenue will have to change because actually they'll have to compete higher or harder to, for example, by offering some of the higher interest, payments to savers to keep them there?
Actually, the opposite. So I think today is a reminder that you should keep your deposits only in heavily safe, deposited, and well-regulated large institutions. When people chase returns or services in small financial institutions, they always run a huge risk. The Financial Stability Board has created a list of globally systemically important financial institutions, which is the one we focus on. So the HSBC, the Deutsche Bank, the BNP, the UBS, the Intesa, the Santander. These institutions have more capital, more regulation. There is a reason then, as a depositor, you are safer. Clearly, they're not going to pay on your deposits, the hot money of some startup and VC firm will, but then you can sleep at night. And so what I think is going to happen is every institution around the world is going to look at it, where am I keeping my deposits? And they're going to move them to the JP Morgan, Morgan Stanley, Bank of America of this world. And hence, if you've been, let's say, riding the crypto and tech bubble in VC and hot money, you're probably in trouble. Many fintechs will end up being in trouble. I've always said it. Fintech are great for TVs. I want to keep my cash there. And many institutions are going to do the same.